My name is Ronaldo Hernandez, and I will be doing the SWOT analysis for Third Federal Bank. The strength that Third Federal Bank offers are its customer base. Its customer base are local clienteles from its local economy. Being a savings and loans bank, they tend to represent most of its local neighborhood type of economy. They also have a strength in its distribution channel because of its local economy. Yet once again, it offers a more interpersonal distribution. They're able to come in contact with clients as opposed to larger banks who do not have that access to the direct customer. They also have to most likely spend less on advertising. Another strength that Third Federal Bank offers is its loan losses. Last year, in 2009, the bank reported 28 million loan losses in its first quarter. As opposed to 2010, they have started off this year with 25 million losses. So they've been decreasing their loan losses as the years go by. This is due to probably more internal restrictions on its loan losses, therefore making it a little bit more difficult to loan. Another strength that Third Federal Bank offers is its rates. Because of the Fed allowing savings and loan banks to borrow at a much cheaper rate, they're able to have a larger spread between their lending and their borrowing, therefore making them more profitable if managed properly. A weakness that the Third Federal Bank has is its assets and liabilities, one of the points that I would like to prove, and it's its mortgage loans and interest paid. Because it has so many most of its businesses mortgage loans, it has a long time that it has its mortgage loans out for, and it has a greater interest paid to its customers. Therefore, they're having large liabilities by paying a lot of interest, and have a lot of loans, especially in this market at the moment. It's not one of the best assets to have. An extension on that is that they have a single market. Because Third Federal is a savings and loan bank, most of their assets are mortgage loans, which at the moment, due to the economy, has become increasingly difficult to survive in a mortgage loan lending market. But one of its other weaknesses is its diversification. The savings and loan bank, because of its primary business on savings and loans and mortgage loans, it's not very well diversified, therefore making it really hard against all the mortgage lending losses that have occurred in this past couple of years. Another weakness that it has is its net income problems. In 2009, it had reported net income of $5.8 million, as opposed to 2010, it has reported net income of 2.9. Therefore, it has decreased its net income by 2.8 million in just 1 year. The opportunities that the bank has. Lately, the market has been able to turn around. So the market turnaround has given Third Federal some hope that it will continue to be profitable in the mortgage lending business. The bank, Third Federal, also is it's a savings and loan which the Fed gives them preferential treatment, therefore allowing them to lend money at a much better rate, therefore attracting more customers, which could help them expand, especially in this economy. Also, due to the international market crash, they have an opportunity to be able to attract the local customers who are scared of the failure of big international banks that could have international assets that could fail, as opposed to a bank that's more locally concentrated. The threats that they offer it's the housing bubble. The large number of mortgage loans has become detrimental to the company's survival. Obviously, the housing bubble has created a lot of problems for a lot of banks, but especially the savings and loan banks, which most of their profits come from mortgage lending. This has been extremely difficult for these banks to survive. International banks also pose a really big threat for savings and loans because they have become the one-stop shop. You're able to invest, most likely get your insurance, most likely get a lot of numerous products. As opposed to savings and loans, they're very minimal on their products. They're only able to do, checking accounts, mortgage loans, business loans, but very, very minimal. The economy, of course, it's inevitable, poses a threat to pretty much everyone. It's Third Federal's competitors as well as Third Federal. Also, Third Federal has seen falling sales throughout the years, so that is also a huge threat to the survival of the Third Federal. All right? Thank you.